I'm William Kumwembe with this week's edition of the program Business Time. This is a magazine program in which we bring you major business and economic news stories making headlines in the country. And in the program today, we speak with the Public-Private Partnership Commission Chief on the role of PPPs in enhancing growth. And also in the program, we speak with National Bank of Malawi new Chief Executive Officer on dreams and aspirations. We have these and other stories. Stay tuned. Hello and welcome. This is Business Time, and in our main story in the program today, some years ago, Malawi launched the Malawi 2063, the country's long-term development blueprint. One of the critical aspects of the blueprint is who funds the development aspirations. Among other things, by 2030, Malawi aspires to become a middle-income economy, but funding remains critical if Malawi is to attain that aspiration. And Public-Private Partnership Commission is one of the key players in ensuring that Malawi attains its aspiration by ensuring that there is a link between the private sector players and the public entities. I caught up with the Public-Private Partnership Commission Chief Executive Officer Patrick Kabambe on strides recorded this far.
The Public-Private Partnership Commission was created through an act of parliament. We are a government agency responsible for looking at government projects, public projects, which can be financed and implemented with private sector financing. That's in short. What it means is that, as you can understand, the government is under extreme pressure to develop infrastructure in the country. Now, the budget is really constrained, the debt levels are high, and therefore to deliver on these public projects, from public resources, it's a huge challenge. And yet people in Malawi expect these infrastructure projects. So this is where we come in. We look at those projects and identify which ones can be of interest to the private sector. And then we advertise and look for private sector who can finance and operate these projects. Now in doing that, we have to make sure that, it's a win-win situation, because sometimes people think that private sector, they have to make profit, which may be at a cost to government. So we need to strike a balance between private sector interest with public sector interest. In other words, the project must be affordable to both the government and the consumers or the users of that project. That's really our main mandate. Of course, our other mandate is also to work on divestiture of government stake in state-owned enterprises. If for some reason the government decides that we want to reduce our shareholding in a particular company, our mandate is to do the process and identify private participants to take over ownership of those companies. It may be 100% or maybe partial, depending on the project. So that's, in a nutshell, that's the PPC's mandate.
What would you highlight as major impacts of the PPPs in the country to the economy at large, and also maybe in particular to the private sector?
Let me say that globally, PPPs have become a very important tool for growth and development. This is because the private sector are, by their nature, more efficient, they create more jobs, and because they have interest to make a return on the project, they would do it cheaper than the normal public procurement. So in the long run, government will benefit that there will be infrastructure which could not have been done without that financing, but it will be done reasonably cheaper, but also quicker. And then, of course, there will be spin-off effects like job creation and what have you. So it's really a way whereby it can spur growth and development. And we've seen this, that it's really coming up in many countries, both in Africa and even in developed countries, are now doing projects through a PPP approach.
Would you provide some of the examples that we can highlight as projects that have been successful in recent past regarding to PPPs in Malawi?
That's an interesting question. I would mention, for example, the government, did the concession for the railway infrastructure, where we now have a private operator, SIA, operating, the railway in Malawi. At the time that this concession was starting, the railroads were really in a bad state, not a very attractive wagons. But now, we've seen that the railway investment has come in, it's now running efficiently, and very soon they'll even be, going to Lilongwe and to Chipata, which means that the service is improving. They even have more improved wagons, which means that you and I can comfortably, ride on those trains. So that's an example of a project whereby, private investment has seen, improved services in the country.
How do you ensure transparency and accountability, especially during the bidding process? We are speaking in a space where challenges of corruption exists. How do you ensure that the preferred bidder is the one who is supposed to qualify for a particular PPP in the space?
So the PPP Act is very clear that the procurement process has to be transparent, has to be accountable to the public, because let's not forget, this is a public project. So we normally will go through a tender process, get as many competing bids as possible, so that we get the best available private operator to run those projects. We don't just pick an operator from off the shelf. So that way we are sure that we are getting the best deal. So, and we do advertise this in public media, and all the results are shown, and people are free to check with us in case they have got a reason to doubt about the choice of the private investor.
How is the Commission positioned to attract partners, private sector partners in the public projects or public sector projects in the country?
So before we even go to invite investors to come in, the first thing we do, and this is the part of the law, is we do a feasibility study. The feasibility study looks at all aspects of that arrangement, from the financing to the environmental issues, to legal issues, to social issues, so that we all understand the risks that are associated with that project. By the time we are going to get investors, we understand exactly the risks. If, for example, a project requires a lot of importation of materials, we know the impact of Forex, so we have to make an assessment about that, and how do we mitigate those risks. So because of that process, by the time we are negotiating with an investor, we would already know the issues, and all the concerned parties would be fully aware of the measures that we need to put in place. So when we're doing the contract, we would normally have clauses that address those particular risks. It may be, as we say now, the economy, Forex, those issues we already discuss and we negotiate with the investors so that all parties are comfortable that it will be a win-win situation.
One wonders who participates more? Is it the local private sector or FDIs in regards to the projects that you have implemented this far?
At the moment, most of the projects are by FDIs, international investors, and this is an area whereby we're trying to see how best to entice local investors to take part. Over a week ago, we had an investors conference in Lilongwe, where we brought together local investors for them to understand the PPPs. And it was very clear from that conference that most of them are not aware about opportunities that are there for them to invest in the infrastructure in Malawi. And we do hope that through that they will come forward and take up some of the opportunities that are going to be there. Of course, the other issue of local investors is the normal issues around high interest costs. So that's a challenge that is faced. But as I said, the risks around that are normally mitigated, and there are clauses in the contracts to make sure that there are some safeguards put in place. But you're right, we really want to see more Malawians participating in these investment opportunities. It's also going to be good for the country because when it comes to paying them off, the issues around forex will not come in, because at the moment when you have a lot of foreign investors, for them to get their dividend, their money, it requires forex. Whereas if we have local participants, the money generated will remain in Malawi. So that's something that we are working hard to see that we can get more and more Malawian participants in these projects.
Talking of investor conferences, I think it's not the first time Malawi is hosting such. It has been hosted using various other names. One wonders, are these not just talk shows? Why I'm asking this is because do they bear the desired fruit, the desired impact by end of the day?
Well, of course, that would be the normal reaction by some people, but I think there is value in these conferences, because through that you're able to come together and discuss issues and agree on some takeaways. The challenge that we've seen in the past is that at the end of these conferences, no actions are followed up. But for us, what we've agreed this time around is to have a report with clear actions and steps to be taken by all concerned parties, so that we can be following up on those issues that we agreed. There are many issues raised by the private investors. We're going to follow up on those. We're going to discuss with the relevant parties, the Minister of Finance, the central bank, so that they take their own responsibility in addressing those issues. We do hope that as Malawi, we need to move from just talking now to implementation. So we're looking forward to having this as not just another talk show, but something that will really result in tangible results.
Do you happen to have any last words, especially you in your capacity as the bridge between the private sector players and public sector institutions?
Well, I think at the moment we are seeing a lot of interest from ministries, departments, and agencies. As I said, all ministries, they have a mandate to deliver, but they are all looking at the national budget, and that is becoming more and more difficult with the current debt levels, with the current needs of the social sector. So there's a lot of interest to now see more MDAs implementing their projects through PPPs, and we do have quite a lengthy pipeline of projects that we're working on developing at the moment. And that over the next year, we hope that some of them could be rolled out with the local private investment. So these are exciting times for the Malawi private investors. We're also encouraging them to partner with international who may have specialized expertise and experience so that they benefit from that. But we hope and we are sure that PPPC can play its rightful role in spurring economic growth in this country.
Now, Malawi Stock Exchange listed National Bank of Malawi has a new chief executive officer. He is Harold Gia. He takes over the mantle from Makfasi Kawawa, who retired last month. In an interview recently, Gia said he aspires to see the bank attaining 100 million per year profit by 2027, among other aspirations he has lined up for the bank. We caught up with Gia in this interview.
So as I take on the position, National Bank is a very well performing bank. All that I want to do is to make sure that I move the bank to the next level. We have a strategic plan, which I was part of developing. We are very clear about the path that we want to take. So as I take on the bank, I'm confident that I'll be able to deliver on that strategic plan. And our plan is to make sure that this bank is able to deliver $100 million profit after tax by 2027, and to be the #1 digital bank. That is my plan. We are #1 at the moment in the country, but I want us to be the #1 digitalized bank in the country. We also are interested to go in the region to expand our reach, to make sure that we are represented in 4 countries in the region, and we have over 2 million customers. That is my focused goal, and I am sure with the grooming that I've had, being here, being the number 2, understanding the CEO who retired, I am more than ready to take the bank on this path. So we had a regional study to find out where is it that would get more value, and we looked at where our customers do business with, and we noted that most of our customers do business with Tanzania, Mozambique, and Zambia. So we're following where our customers go to, so that's why we bought a bank in Tanzania, and we are looking at several targets in Mozambique. We're looking at targets that are comparable targets that we can easily work to turn around so that they are performing, and we're also looking at Zambia as a near-term target. We've done country studies. We have looked at which banks we can work with. We have done due diligences on a few banks. So we have several targets that we're looking at. We are talking to some shareholders, but you know, buying a bank is a difficult process because you have to have a willing seller and a willing buyer, and then you have to agree on a price. So there are a lot of negotiations that go behind the scenes. So we are engaged in several of these, and indeed you watch the space because there could always be something. But whenever we are close to a transaction, we will get in touch and make it public, because we are a listed company and we want to make sure that all our shareholders and all our stakeholders are aware of the path that we're taking.
Moving on with the program, the 2024 tobacco selling season nears closure as both Chinkoma and Lilongwe auction floors close this week, and the Mzuzu auction floors will be the last to be closed on August 2, 2024. This comes as the season has largely been rated as one of the best in recent history, owing to improved prices and flow of trade on the market. Our journalist Kumwembe has been following trends on the market and reports.
There are a number of issues that we've seen on the market this year. First, we can talk about the prices. There's been an improvement in prices offered, and this has been attributed numerous times to the increase in numbers of buying companies on the market. And indeed, in terms of prices, we saw on the auction market prices reaching $3.90, close to $4, which is rare on the auction market. Another thing that was noticed on this market is the reduced rejection rate. Now, in recent years, in a number of years, we have witnessed stoppages in tobacco sales because farmers were not happy with prices, or indeed a high rejection rate. And this industry considers it something significant when the rejection rate reaches 25% or 30% or so. But this year we have seen that the rejection rate has been around 1%, 2% or even lower. So that is a plus to the industry in that there was no market disruption as regards to rejection rate. One other thing that we can talk about when we talk about closure of the 2024 tobacco selling season is issues of smuggling of tobacco to other countries. This has also come out a number of times where we have heard the Tobacco Commission confiscating tobacco that was destined for foreign markets. There were a number of issues in Mchinji, a number of trucks, a number of bales, thousands of kilograms of tobacco were confiscated. And indeed, when they confiscate that, they take it to the market, sell it, and the process goes to the Tobacco Commission. So that was there, but not in significant proportions to recent years. Talking about the proceeds from tobacco, we have seen an increase in terms of the proceeds because this year, as at week 13, that's last week, Friday, close of business, the market had registered $367 million worth of earnings from tobacco sales, and that was from selling 123 million kilograms of tobacco. Now, that's a significant increase in terms of the return because last year, at close of the market, when the market had ended, Malawi had earned about $280 million, somewhere there, but after selling 120 million kilograms of tobacco. So worth noting is the increase in the earnings from tobacco from the sales this year, because it is a huge gap in as far as the earnings are concerned when we compare to last year. But if you see the volumes of tobacco that were sold, the volumes are somewhat similar, because we're talking about 120 million kilograms in 2023, and this year at close of business in week 13, we're talking about 123 million. So as we're talking about market closure, we are anticipating perhaps it could be some 2 million kilograms or less than that. So we are still within the range of 125 million kilograms of tobacco sold. One other thing that comes to mind when you talk about the volumes of tobacco that have been sold this year is the failure to meet the demand. Now, the demand for tobacco this year was at 190 million kilograms. We have produced 123, and at the very end of the market, we anticipate we can put it at 125 million. So if we look at 190 million kilograms of tobacco that companies wanted to buy from Malawi this year, and that we have been able to produce 123 million or 25 million kilograms, it means that there is a huge gap. We have failed to satisfy the demand for tobacco again this year. Now, the demand, the gap has widened, because last year the demand for tobacco was at 140 million kilograms, and we produced 120 million kilograms. It means that the deficit, the shortfall, was somewhere at 20 million kilograms last year. But this year we are talking about a demand of 190 million kilograms of tobacco, and we have managed to produce 125 million kilograms of tobacco. That is a huge deficit, somewhere about 65. That would be 65 million kilograms of tobacco that we have failed to produce. It only means that if we were able to produce this much amount of tobacco, we could have earned a substantial amount. We would have earned even more than the over 360 million that we have registered this far. Now, representatives of the Tobacco Commission are also excited with how the market progressed in 2024, and hold high hopes that there will be an improvement in 2025. And we indeed engaged the Tobacco Commission spokesperson, Mr. Teleforas Chigwenembe.
We are looking at the 2024 tobacco selling season as a great one. In fact, much better than last year's, and much better than the seasons that we've had in recent years. We are describing it as a great, and at the volumes that we've had, we've had more volumes than last year. We're also looking at the prices that were offered. The prices have been much better than in recent years. As we speak, or at least as of last week, we are talking of an average price of $2.95 per kilogram. And last year, when we were closing the selling season, we were at $2.35. So you can see that there is a big difference there. And speaking to farmers, you can hear sentiments that they appreciate that this year's selling season has been great.
What has transpired on the tobacco market this year is a strong message that, unlike the thought previously that the industry is fast dying, the industry does have a future.
Well, with that story, we've also come to the end of today's edition of the program Business Time. It is a magazine program in which we bring you major business and economic news stories making headlines in the country. On behalf of the entire production team, my name is William Kumwembe. Thank you for watching, but always remember, if it doesn't make money, then it doesn't make sense. Bye for now.